right, good morning, good morning. Oh, hold on. My microphone fell down. Let me set it back up. There we go. Good morning, Predictive Trades family. Hope everybody's doing well. Getting this very strong pop in the CPI right up to my key 4019, 4020 level. CPI coming out in a few minutes. Let's see just how dramatic this reaction is. And been talking about this since last week, how we could get a pump, a push into CPI. We pretty much got that since Friday, got some more on Monday, then they brought it back to moving averages for more upside. We're arriving at the trend line from the highs of last year. Here comes the CPI reaction. You know, part of pumping into CPI is so you can absorb the reaction, right? Falling back to these key levels we were at and these key moving averages that we've been holding all week, still very bullish, right? Of course, we start to get our CPI reaction. Gap down on the 30-minute and the 15-minute. Not seeing any kind of crazy spike in VIX just yet. Frankly, I love this kind of a reaction, right? Falling right back to where we were opens up a lot of opportunity to the upside. It also opens up some great opportunity to the downside if we can't stay above key things like our moving averages. So right now our 45 MA chart, I cover this every day, but I have the 45 EMA from all intraday time frames, 4 hour and below. So right now, that 4 hour sitting down at that 39.22. That's also kind of where we were topping out on Tuesday before finally pushing for more, and we never kind of went back. Yesterday, we got that gap up, just a little bit of a gap fill, and then kept going. So we definitely want to mark what is left of the gap. As that can be support, and look at this, we're bouncing right back up near yesterday's highs. Going to be very interesting where we open, but they are leaving some room to get up to the upside. We now have our pre-market high, pre-market low to work with. We have a range that's been set. So we do have part of that gap that's been left behind. We also... Now we filled Monday's gap. Yeah, I think we're all good past that. Sorry, just looking around. I thought for some reason we had another gap, but if we do have a little downside, I could try and looking for this 39.53 and 39.41 to try to hold. Right, it's just getting back to Tuesday's highs, yesterday's lows, which make a zone with a gap for support if we do continue to drift down before finding buyers to continue up. So looking for those key levels to hold like they're trying to do right now. Looking to get back up to this daily 200 during the cash session, which sits around 39.90 now. Kind of where we were topping out yesterday. And then complete the same journey back up to 40.20 during the cash session to test these trend lines from highs of last year. I got a little chart down here, little being the keyword. Let me try and make it a little bigger. Come on. All right, there we go. So from the trend lines of last year, Just real quick, just to confirm. Give us a little more time on that. We're coming back up to fill the gap that we had on that 30-minute chart. There we go. Now we can see from the highs of last year coming on down. We have rejected it every time we got near it, and here we are, very close to tapping it. Basically sitting right at about 40.25, 40.30-ish. So right up near the top of this daily squeeze. Oh man, right back up. So we are nearing our trend line from highs of last year. We have to see in between this daily 200, the yellow line, this yellow line over here, that daily 200 and this trend line are a zone of resistance. So we need to be prepared for us running into it, starting to lose it, and rolling back over. We also should be prepared in case this is, the first, second, third, fourth test. We should be prepared for the, maybe not unlikely scenario that we start to break through and actually change out of this downtrend. But we are ultimately in a bit of a wedge on the daily. And from the lows of last year, we're running into that first resistance point. So we could see another rejection, another rollover to retest our support. And we need to be ready for the breakthrough. It's not all going to happen today, right? We're not going to break through here and just start racing up to these highs. We're going to break through, mess around, have a day that we dump back to retest before taking off, But just getting ready for those scenarios. So for today, oh man, strong. We do have an hourly squeeze top near that 4,500, jeez, 4,005, right? So we do have a little resistance there. We can see that this wick is already getting up to that and pulling back a little bit. And what a recovery. I mean, we are looking like we're set to open on a small gap up. Keep an eye on these, pre-market lows in the bottom of this 30-minute squeeze, before the data drop. We could have a pullback to that 39.80, 39.85, which if I throw my cursor down near this 39.80, you can see like we almost got there, we pulled back. We ran into it, we kept pulling back. We started to get through it, we pulled under it, then we took off at the end of the day. So that 39.80, 39.85, your local support, and if that starts to give out, then you start to target down to these levels, down where this wick got to. But if we can hold above that 39.80, 39.85, looking to push through, basically where we are now, this 39.96, 4,000, 4,005, make it up to this 40.20, and try to continue on to this daily squeeze top. Next big key level after 40.20 for me is 40.56. But as we always see around 40.40, we can get hung up, and now we have a daily squeeze top there as well. We should have a 2-day squeeze, yes, sitting up further around 40.70, 40.80 up to past 4100. Just for some upside targets if we can get continuation through trend lines from highs. And our, 45 MAs, if we look at those, they're all lining up with key levels. 4 hour down at 39.22. 1 hour, 2 hour, or 2 hour at 39.41. 1 hour at 39.61. And our 30 minutes sitting around that 39.80. So all the levels I just kind of covered as potential supports if we do drift back down, all lining up with our EMAs from different time frames. So overall thesis looking good. Upside, we have downside targets if we start to give out and slip back before trying to push through this trend line. overall, let's take a quick look. At what CPI looks like. Where are you? There it is. So it looks like everything was pretty much in line with expectations. Energy prices down, food prices up a little bit. So yeah, looks like most things in line and potentially coming down on the CPI numbers. So you get your snap reaction, we're right back up. We're going to be potentially opening right near yesterday's highs, or a little bit above them, sorry. No, yeah, we're pretty much right at yesterday's highs. So overall, if we drop this down to, let's say, we'll do it at the end. So we've got our targets upside downside on ES. Let's work through some of our other names. Not going to hit the full list today. Want to wrap this up. But everything looking decent. Let's look over at NQ. Was definitely a strong leader yesterday. And made it up near this 11,500. We can see pulling back a little bit, but looking like it's going to be opening near this daily 50 MA, sitting at about that 420-ish. We do have a 1 hour squeeze bottom, just a hair below 400. So ultimately, let's just see if we can hold 390, 400 on any dips. That's also kind of where we consolidated and flagged yesterday. It's also right near where we topped out in the morning. So you basically got a little zone of support here. I'm going to just put it right about there. Looking for that zone of support to hold. We have our 1 hour squeeze bottom there. In an attempt to get back up here, if we start to give out this zone, then we want to start to target back down where we bounced yesterday. So yesterday's lows and higher low, which gets us down to the bottom of this wick. Past that, the daily 21 and daily 8 are stacked right at 250. So if we were to have a down day today, for them to load up in the next week maybe, we want to be looking for that wick from the data reaction and these moving averages below. If we can hold up here, I'm looking to get back up to 500, push through pre-market high, and try to continue up to our next big key level, 677. That's NQ, on to ready. Ready, also a very strong name yesterday, held that daily 200. Did not even need to get down to our little zone of support. I'm going to leave that there as a potential target if we do end up with a breakdown. And, you know, basically same scenario. Our zone of support from the ready sits down near that, where we were topping out yesterday in that consolidation midday. Around 1845 up to 1850-ish. So that's where our support sits. If we start to give out 1845-ish, where that 1 hour squeeze bottom sits, then we want to target back to 1840 and 1833, where that daily 200 sits. If we can push, if we can hold and start to push, looking at through the pre-market's highs, 1870, push up to 1880, 1890, and we're starting to run into the top of the 2-day squeeze up there. Big key level, 1900 above. And technically, We could almost get there today on an ATR. Moving on, YM. So YM was maybe a bit of the lagger yesterday, definitely part of the pullback that we had. But it finally started to catch up and get going end of day. Overall, you can see that this 34,000 was our resistance until we started to get through. We even pulled back to it a few times. So right now, looking for that 34,000. I'll even go down to about there. Call it that. So on any dips, looking for 33,950 up to 34,000 to hold. From there, if we can get going, looking to push up through 34,200, pre-market high at 333, with the goal of getting up to 34,500. If we start to lose 33,950, we want to target the bottom of this wick, which is back at the lows of yesterday, at 850, and then down to these moving averages at 750 and 600. Apple. Apple definitely helped out yesterday. Got a nice push. Had a little slip down near the daily 8 and squeezed bottoms, but once we got back over 130, that was a clear sign. Called that out a bunch that once, when we were under 130, if we could hold and get back above, it's a great spot to go long. Push through 130 up to our key zone above, so looking for this zone to hold. We also arrived at the daily 21. So basically looking for about 132.5 to hold us up today on Apple, to push out of this zone, get back up to where we closed, near 133.5, pre-market high near 134.5, 136, the big key level above. If we start to lose that 132.6, we want to target 132, 131.5, 130. That pre-market wick got down to 131.5. And that 131 key level that we got above yesterday. So we've got targets to the downside. We've got moving averages below. About to open near the daily 21. Let's see if we can hold and continue pushing higher. Daily 50 still way above at 140. And we have some key levels to take out on the way. Amazon. One of the strongest names yesterday, just pushed and kept pushing and kept pushing. Basically, the little pullback we got on the market in the morning just took Amazon back to VWAP before shooting higher. As you can see, arriving at my next key level, right around this 97 pre-market. Basically looking for just that pre-market low, 94, 94.5, looking for that zone to hold, for Amazon to remain strong and keep pushing through 97, ultimate goal trying to get to 100, 101.78, next key level. If we start to lose that 94, then we want to target back to 92, 91. Google. Man, cat got up to 250. Look at it go. Google, also a very strong name yesterday. Made it up above 91, about to be opening right near it. So ultimately, Looking for 90.5, 91 to try to hold us right at this 30-minute squeeze bottom on Google. If we can hold there, looking to push up through 92, pre-market high 92.3, and that daily 50 at 92.5. I'll try to make it up to the next key levels at 93.5 and 95. We start to lose 90.5, coming back potentially to test 89, this zone where the pre-market low is, that little wick. Moving on. Meta. Meta was decently strong yesterday and been on a very strong move up near the second Keltner. Overall, since it didn't push so hard yesterday, it is a bit of a tighter range. So I'd be looking at each of these bounce points basically as support. So looking for that 132 and a half to hold. For Meta to try to get through yesterday's highs and pre-market highs around 133.85, get through 134, try to push to 135 at 137 as the target. We start to lose that 132, then we want to target yesterday and pre-market low back down near 130.5, and through 130 we get back to the daily 8 at 128.5. Microsoft. Yeah, pretty simple on Microsoft. Looking to hold this 232.86. If we start to lose that, coming back to 230. If we can hold that 232.86, looking to push through 236, kind of where we're topping out yesterday in pre-market. We have the daily 21 at 236.5. Trying to get up to the daily 50, which sits pretty close to 240, 241. So that's the target to the upside on Microsoft. Netflix gapping up to that 333. You minx. So the reason I try to draw these zones for you guys during prep is so that you can also mark them on your charts. As you can see, Netflix dipped right into that zone yesterday, found the bottom, got back out the top, held it on a retest. That's where you go long. And setting new highs, about to open, even from that retest point, up about 12 points. So we do have a little bit of unfinished business from these highs, around 329 up to about 333. So I wouldn't be surprised for a little dip and gap fill on Netflix, but very strong at the top of daily squeeze. Next target 340 to the upside, but we are starting to get near that third Keltner. If we do get to that 340, 342. Past that, my next big key level, psych level 350, then 361. Not saying that we necessarily get there as we get to the top of this daily squeeze, but 2-day squeeze, but it is starting to open up. It was a little tighter, starting to slowly open up, so could fire this 2-day squeeze on Netflix. If we do come back, our gap is 327 and a quarter-ish. Our highs, again, near that 329. So those are kind of bounce points you'd want to look for if we do start to come back to fill the gap. Below those, then we're coming back to this zone for a test. NVIDIA. NVIDIA, since Friday, left its POC, 142.8, down here, and has just been sailing higher. Yesterday, again, key zone, dipped down into it, tagged that daily 50, took off, and setting new highs. About to open at those new highs. We're at the top of an hourly squeeze, which spans down near yesterday's lows. Ultimately looking for 160 to hold up. It's about where we closed, and if we come back, if we do start to come back for a gap fill, 160 is where we need to bounce, fill the gap to take off. If we start to lose 160, then we want to start targeting these pre-market lows, 159, and then back down into this zone, 157, 156. If we can continue, the daily 200 sits above at 166, and second Keltner to the upside at 169. We're right in the middle of that 2-day squeeze as well. So ultimate big target would be trying to get up to like 180, but that is getting past third Keltner. QQQ. Oh man, right back up near the highs. ES, calm down, come back a little. So QQQ, definitely a little bit stronger yesterday than SPY. Either way, we've got our 1 hour squeeze. The bottom of it is down at 276. Coming back to fill the gap would be 277.5. And we have the daily 50 at 277. So basically looking for at 277, 277.5 to hold early if we do start to come back for a little bit of a gap fill, filling the gap, that 277.5. If we start to lose 277, then we want to target the bottom of that 1 hour squeeze at 276. This pre-market low, 275.5. Should those start to give out, we want to target the bottom of this wick down near 273.5. If we can keep going to the upside, big target 280. Past that, second Keltner sits up near 283.7 and 285, the next big key level. And moving on, SPX. Left a little bit of a gap behind. Let's see, going to be opening up 17, 18 points. So going to be opening near the daily 200 on SPX. Next stop would be 4,000. Top of this daily squeeze, 4,008. And we have a second Keltner at that 40.13. So those are the key targets if we push early. If we come back, 39.70 is filling the gap. And then looking for basically 39.50 to hold on any pullbacks, kind of where we topped out on Tuesday, where we resisted a little bit yesterday, then pushed past. So on any pullbacks, looking for that 39.50, 39.60 to try to hold if we go past filling the gap. If we start to lose those, then we want to target that 39.40 and this gap fill between 39.30 to 39.20. If we can keep going, target 4,000, 40.15, 40.20, pretty much. SPY. driving above the daily 200, getting very close to 400. On any pullbacks, filling the gap would be 395.5. I have a big key level at 395.8, so basically looking for those to hold. If we do come back, I have a number of key levels in here to play off of. So ultimately looking for this 395.5 to hold. Also have those pre-market lows right back near 395 and where we closed. If we do get any pullback. And if we can keep trucking to the upside, basically 400, 450, and then 402.75, next big key levels. Closed around 395, 6-point ATR. You can get, up to 401-ish on an ATR. We can make it to this level on a little more than an ATR. And yeah, if we start to give out to say 395, we want to target this zone to come back and tap and get right back going. And if we start to lose this zone, back down to the daily 50. Tesla, and then VIX, and we're done. VIX getting below 20. Tesla, spent most of the day pinned between 122 and 123. Still going to be opening in yesterday's range. Let's see, basically just looking for that 122, 123 to hold. We were stuck in it for a while. We slipped it for a little bit, then we took off again. Basically looking for it to hold. Don't want to get back to where we slipped it. So looking for that 122, 123 to hold. And if it can hold and we start to push, looking to get up through yesterday's highs, 126, 126.37, big key level. And then 130, 131, where the daily 21 sits. If we start to lose 122, we want to target pre-market lows and the daily 8, daily 15 down at the bottom of this hourly squeeze. Should that start to give out, 116 and then 112.5. And yeah, let's see if we can break through this 126.37 and make our push up to about 132, where the daily 21 sits. And moving on to VIX. Hey, thank you everybody for the likes. I'm seeing that we have, about 10 people watching, 7 likes. Appreciate it. VIX tanking down to 20, the bottom of a daily, and we have a 2-day squeeze even further. That 2-day squeeze bottom very flat, a little hard to see maybe for you folks, but sitting at around 19.3. So for continued upside, looking for VIX to stay under 20, continue down to that 19.3, maybe 19. But if we're going to get a little bit of a gap fill, we'll probably see VIX come back up to test the bottom of what was kind of the weekly lows during the cash session at 20.5. And if we're going to do more than a gap fill, then VIX will likely go past 20.5, get back up near yesterday's highs around 21, 21.15, where the daily 8 sits. But, we fell to our moving averages. We've touched them all pretty much. And yesterday the last 2 days we've rejected a move away from them. Even though we had that little gap up pre-market, now we're back below. So this just lends to pushing away from moving averages. Let's see if we can continue further. And keep an eye on that 2050. If we do have a little bit of a gap fill, looking for us to stay below that and roll back below 20, that green lights the upside. Let's see if VIX can get even lower, back down to 19. But that's it for prep. Man, we're potentially about to set a new high. talked about this in the room yesterday. There is a scenario where the reaction to CPI is good, and we just take off through trend lines from highs of last year. Take one more look at them on the daily, as we are very close to tapping them. And just for a quick double check, yeah, we're pretty much at them. So, patience, careful just jumping into longs. Everybody's, thinking we're just going to rip to the moon. We'll likely get a little bit of a pullback. And, if we just pop on through, we'll use our MA clouds. Let it pull back to MA clouds and try to pick the continuation. But that's it for prep. Good luck today, folks. And we'll see everybody in the chat.